Yo, happy Tuesday, everybody. This is going to be a fun and exciting space. Adam, I think this might be the first time we've had a capital allocator on the show. We're up here on stage with Jason Fang, who is one of the founders of Sora Ventures, who's just become a force of recently allocating to a bunch of ecosystems. I think most notably the track ecosystem as of recently. For those that don't know, we also live stream this. So I've pinned to the top the spaces and also the live stream. So if you want to watch as we go through this conversation, then please go ahead and follow that link. Adam, man, how was your weekend?
Living the dream. Happy birthday to you, brother. I know you killed it, crushed it this weekend, destroyed your birthday, man. So happy birthday for you, man.
Thanks.
Happy birthday.
I appreciate it, brother. Yeah, it was a good time. Spent yesterday in bed hanging out, watching YouTube and Netflix. But I'm excited for this conversation, man. We'll make our rounds and then we'll get on to the conversation. Dogfather, man, we haven't had you on stage for about a week or so. You've been staying busy?
Hey guys, it's always a tough time for me. It's always like around dinner time, so I have to sneak out and tune into the spaces, and then the kids are running around and daddy's already in the space again. This type of situations. So I'm always trying to hide a bit and to do as much space works as possible. Today I could not stay away because it's just too much of what I'm interested in. So big props to Jason and Sora Ventures. Really looking forward to what you're sharing today.
Yeah, it's going to be a fun conversation. Last but certainly not least, Chris, man, I know you're big into the capital space or just a lot of interest around it. How you feeling about this space today?
Good morning. Man, happy birthday, Jake. He's been grinding for the last week super hard with Emblem. Had a bunch of late nights just kind of putting a bunch of stuff together. So it was good to get out with you and kind of show you a good time for your birthday. So happy birthday, Jake. And yeah, it's cool to see, capital allocation really kind of taking off within the Bitcoin ecosystem. You had a few Bitcoin focused funds over the years, but there really wasn't much to do, right? There wasn't a ton of infrastructure to invest in. It was kind of a lost cause. And so it's great to see new funds kind of, spring up and become super active because now there's all these different kind of segments within the industry. So yeah, really excited about today's conversation. Really excited to talk to Jason.
Let's go. And he's here on the live stream as well. Jason, man, we could just start right to the top. I know you've come in recently over the last few months with just some forests, although I'm assuming you've probably been in the space for a little bit. Would you like to just give us a brief background of who Jason Fang is and of Sora Ventures?
Yeah, so I started investing at a professional level in 2015. I was one of the earliest employees at Fimbushi Capital. So at that time, Vitalik was still a GP at the fund. And then I got relocated to Shanghai and China to kind of like help with investment as well as kind of the early days of Ethereum. And this was before the ban, of course. And then in 2017, I decided to leave to start Sora Ventures. So I've been investing in the fund initially was allocating about 50% the asset into entertainment. And at that time, this was like before NFT, before SocialFi, before metaverse and all this GameFi narrative. But the experience working at Fimbushi kind of taught me that there's obviously certain industries that's work really well with Web3, and there's certain industries that have more of a low-hanging fruit, right? And so we put in a good amount of our allocation around these 721s narrative and entertainment narrative, and that did really well for us. And so last year we started doing Fund 2, and that narrative around is obviously things have changed a lot. And so we decided to bet on two narratives. One is the future of Bitcoin, and that is Ornos, and the other one is the future of Ethereum application, which this is for most audience, I think, is relatively new, but it's called Decentralized Science, DeSci.
Yeah, we actually had a guest on the last show who was talking about DeSci a lot. He was into putting mushroom DNA on Bitcoin and how to, capitalize on that. It's kind of like speaking, in tongues to, us on the space. We're listening to it like, what I said to him, it feels like you're probably 10 years too early for this. But tell us a little bit about what that even means for us.
Yeah. So if you kind of go back to the history of before ICO, the funds that actually invested in blockchain at that time, there was only a handful of them, but realistically, we're looking into investing into applications that leverage about 10 to 15% of blockchain tech. There wasn't really like a one full company where it's like 100% blockchain. That did not exist back then. And so majority of those applications actually revolve around kind of the theme science, right? And science is a very broad term. You can think of it as, AI is part of science, encryption is part of science, bio is part of science, healthcare is part of science. So that is a very broad terminology. But the idea here is that we would be seeing a lot of much more Web3 use case around things that are relatively hot in the Web2 market as well. One being healthcare and second being AI.
Interesting. Yeah. So the guest that we had on Friday, he wanted to take these different types of mycologists. So I think he was mostly focused on lion's mane, putting it on Bitcoin through ordinals, and he said his whole idea was to take some of that market share away from the biotech space that currently kind of has a monopoly on these different types of I don't know what the right word is, but like recipes for these different types of things you could do with mushrooms. But as yourself, as you're a VC, the word science generally is kind of like intertwined with education, which is generally like kind of nonprofit, kind of like a nonprofit kind of idea. So as a capital allocator, how do you look into something like decentralized science and say, hey, first we want to, improve humanity through these ways of, distributing access to information, but where's that like profit motive come from, or how do you go about thinking about it?
Yeah, so I think it has to do with timing, right? So, the way we look at this industry is that it is definitely expanding. But some of the signal that we look at is, for example, the Bitcoin ETF approval for a lot of people is, institutions are bringing money into Bitcoin. But realistically, the way we look at it is that, other VCs and other institutions are now much more comfortable with investing in blockchain in general or Web3 in general. And for a lot of these people, the last, if you look at some of the companies that bet in the last 10 years, it's mostly around science, right? It's mostly around AI. These are the things that are hot, right? And so a lot of these companies will actually end up, utilizing certain elements from Web3, whether that is a form of NFT, whether that's a form of token, a fungible token. Those are, or even a form of DAOs, right? We've seen that pop up in the DeSci quite a bit. And so the idea here is that a lot of the companies that even for Sora Ventures invested, a lot of them when they came out, they're not like 100% Web3. They always came out as a relatively early stage Web2 company, kind of like grown, spent some time building their product, and then looked into Web3, start integrating Web3, and then basically start as the industry evolve. Then obviously they have a lot more use case and utility around what they can do with it. In the space of science, and out of everything else we're seeing in science right now, I think bio by far is way ahead of the game. So this is kind of like the low hanging fruit in DeSci right now.
Interesting. And now, kind of focusing, on Bitcoin, you came in. At least you became on my radar a few months ago when you started. There was this tweet where you basically said you wanted to go all in on the track ecosystem, or that you identified this emerging kind of market within the crypto space or within the ordinal space as something that was severely undervalued. First, was that the first big play into ordinals? And then what is it about track that really piqued your interest and also investment?
Yeah, so track got very I guess from my perspective is I think after the Jubilee upgrade, I think there was a need for a solution that would basically enable developers to feel comfortable about building on ordinals. And what I mean by that is, before Jubilee upgrade, I think everyone was very excited about the future of inscriptions and BRC20. But after Jubilee upgrade, I mean, people started to wonder, even though you have these billions of dollars of asset on chain, realistically, there isn't a lot of stability. It's like the infrastructure and the consensus is all kind of like fragile, right? And at one point they were even talking about a split, in the BRC20's ecosystem, which is, obviously insane. If you put in a lot of money and then you realize that you don't really know how much you actually own, or like which kind of like narrative you end up going with, it gets very confusing, right? And that is a sign of weakness. And so when we invested in Track, at that point, it was more of a concept that, look, there's this concept of decentralized indexer that could be built to kind of solve these issues. Even today, a Track of TAP protocol today, it is still basically a centralized indexer. But the idea here is in a couple of months, they will start releasing their platform Track Core V2, which would enable them to basically start making this a more and more decentralized. I think if you look at the kind of like the thesis around why we invest in Bitcoin on day one, is because we do believe that Bitcoin can have a lot of utility. And that utility will really be driving kind of like the next bull market, right? The reason why Bitcoin will be 100K, 200K, I think a part of that will be coming from the utility itself, because there's going to be something that exciting that drive investors, speculators, that they want to get involved. The other thing that we look at is just in general the narrative between Bitcoin and Ethereum. I mean, they're not the same thing, right? People like to say that you can just bring L2 into Bitcoin. Yes, you could bring L2 in Bitcoin, but then you lose a lot of the security infrastructure, the consensus, decentralization, the smart contract ability that usually is embedded in the Ethereum community. And so a lot of the L2 that we're seeing today, which is obviously a very hot topic for VCs, is that there's going to be a lot of these L2 being built, and I think just in terms of pitch, I've heard like about 30 L2s thus far, or companies are looking to do L2s, which is insane. Right? It just shows how this is all of a sudden that people just started to do L2, right? But then anyone who actually can look into the tech and consulted with a lot of people who understand the tech would tell you that yes, it is possible, but it's just like everything's centralized. You just have to basically trust on the network, trust the people who are building it, and that, in my opinion, is already a sign of weakness, right? And not every developer will buy into that narrative. But what is interesting is that will probably capture the first batch of user base into Bitcoin. But our fund is a venture fund. We're not a hedge fund, so we're not looking to exit within months or weeks, right? So from our perspective, we're looking at the basic things, which is the way I've explained to people what Bitcoin is today versus like Ethereum, is that Bitcoin is basically an embryo with no legs and no arms, and the VCs are basically trying to like force this embryo to kind of like sprint. And so is that possible? Of course not, right? And so but then they're selling this narrative to the retailers that, hey, because you can make Bitcoin faster and make Bitcoin cheaper. It's easy for retailers to understand that part, right? Because it's a no-brainer. But retailers don't really care about the product. They don't really care about the security of that. I mean, so that is the part that investors care, right? Because at the end of the day, we want to be building on an infrastructure that's robust enough that could attract a lot more investors. A lot more developers. And fundamentally, with anything in Web3 and in the blockchain, it's developers, right? So if there's developers involved, then there's users involved.
It's the old Steve Ballmer meme, right? Developers, is that right?
Exactly.
How do you make a choice? Like, obviously you invested in Track. How do you make a choice? Because I look at it as like there's strength in that there are lots of people who want to build, right? So there's that strength. But I get what you're saying about if you have 30 different teams doing 30 different L2s,
yeah,
vast majority, maybe all are going to fail, right? How'd you kind of like narrow down your focus to say, we're going to bet on Track and we're going to bet on this team? Like, how do you make that kind of call?
If you're betting on L2, you're betting on user. So L2s will bring in users, L1 will bring in developers. We're betting on the developer side. We don't care about the users at this point, because we think the Bitcoin narrative is large enough that if Bitcoin utility plays out, it's going to be something that could last for the next 10 years, right? So I think the way that people are looking at this right now is a bit too short-sighted, in the sense that they just want users to come in, like flow in like tomorrow kind of thing. And so they're just like building these stacks are obviously centralized and everything is trusted by this one central party. But what's really interesting about this is that there's a huge split in the Ordinals community too. For example, majority of the users that will end up using L2s, I think, will be coming from the Chinese community. I think will be coming from the Asian community because inscriptions and Ordinals are less popular, like fungible tokens in general are less popular in the West. What's popular in the West are the arts, right? The art, the non-fungible tokens, the collections. And so it is a fair play for a lot of these L2s because they're targeting specifically the Chinese audience, which in this case is, the Chinese audience really have a lot less, they're not as sensitive to the Western audience in terms of privacy and these centralized plays, right? So Harvard Business School did a survey asking a bunch of people in the U.S. and in China, like how do you even care about privacy, right? I think the question was like, do you even care about privacy? And then the result was that the majority of people in the U.S. said that they do care about privacy, and majority of the result in China is like they don't really care about the privacy, or they care less. It was like a 60% versus like a 90%, or so it's like a huge difference, right? So the point here is that I think the culture is different, the market is different, but then the end result is still really, really good in the sense that L2s can bring in a lot of users, can bring in a lot of retailers. But in the long term, I think it's going to be the L1s that work out, right? The L1s will build the infrastructure. So it's a matter of which comes first. But ultimately, this is all kind of like growing the Bitcoin ecosystem together. So it's a win-win for everyone.
Let me ask you about, because I know, Karma token, I'm an OCM holder. Karma token's been, all over my timeline. How did that actually come together? Were you involved? Because you're kind of involved with like the OCM team, the Karma team, I believe. So did you help kind of facilitate that happening together? Or tell us a little bit about how that all birthed, I guess you'd say.
Yeah, so we're the lead investor for the last round for MetaGood, which is the company that launched and published the OCM collectibles. The idea is that, like I said, I think there is a limit to how much you can do as a collectible, especially if you're just launching it in the form of inscriptions in the market, which is a lot of people who hold OCM today are basically collectors. They're more leaning towards a collector basis where they're not looking to dump anytime soon. They're not looking to speculate. They're just really looking to get involved in the community because they like the community. Whereas a lot of the recent NFTs that are being kind of like hyped up on Ornos is a lot more driven by speculation and trading, right? And so immediately, again, you have one market, but two different audience, right? And so some part of the OCM community, within parts of the OCM community, also wants to kind of leverage that narrative where it's like, hey, we're all in this ecosystem. We also want that ability to be able to have some ability to trade and to speculate. And so the idea came about where some of the core OCM members reached out to the CEO of OCM, Danny Yang in this case, and Danny decided to be like, hey, this great idea. Why don't you talk to Jason? He's been doing this for the last couple of years and very experienced in terms of tokenomics and launching tokens. And so he introduced me, and then we started talking. And the first thing I asked him, I was like, hey, is this going to be a pump and dump? Because if it's pump and dump, then I don't want to be involved, right? And the idea here is that they're like, obviously they're like, no, we don't want to do anything pump and dump. Like, we understand that the most important part about this is the branding for OCM, right? But we want to figure out ways that we can expand it, right? And so ever since kind of like I've had that meeting, I've been actively advising a lot of the strategies in terms of the business development partnerships, as well as some of the ways that they should engage with communities. I think OCM by themselves are actually the community themselves are actually quite talented. Like, they know exactly how to execute a lot of these things, but from my perspective, is really kind of like bring in the value where how do Asian community look at this, for example, right? So and what are some of the platforms that we can leverage? Because if you're on Ordinals, you're really only limited to a handful of layers to be building. You're either like forced to build on BRC20, or you wait for runes, or you're building on tap, or you can just join the bunch of the Asian community on the BRC 420. Or stabs, right? So it's like you're very limited. There's only maybe a handful of like less than 10 that you can choose from. And given that OCM has such a I guess in terms of their DNA, they have such a they went above and beyond in terms of innovation, in terms of making the first move of migrating teleburning the 10K collection to Bitcoin. I thought it was appropriate is also to kind of like make the first step towards the tap ecosystem, right? Which
I love the way it started with OCM, but then you expanded it out to other like communities are going to be receiving the airdrop as well. Tell us a little bit about the tokenomics. And literally, I just want to learn about it because all I've seen is a little bit on the timeline, but I really don't know. It was like you could trade track for Karma token. Like, what's the tokenomics kind of behind it a little bit?
Yeah. So this is actually very, very interesting. So in the history of Ordinals, a lot of the early products they actually came from stacks. So some of the products that we see today, they're actually all from stacks. Stacks basically grew this ecosystem. They a lot of these projects couldn't fundraise, couldn't find traction, and then they moved to Ordinals when Ordinals kind of like popped. And because they already had a product on day one, they were able to kind of make this happen. When Benny, who was the founder of Tap, also came up with the idea of this decentralized indexer economy concept, the first thing you have to figure out is like, who are these validators, right? And because you can basically have two options. Either you build a product and then you grow the validators yourself organically, which will take a long time, or you start growing the community today on BRC20, and then while you're building on the product, right? And so that's what they did, right? So they've launched a track token, which is basically on BRC20 last year. It grew relatively to, I guess, 100 mil market cap right now. So pretty good for a token. They're basically, if you look at CoinMarketCap and Genie data, they're all basically in front of like Rats and Sats, and basically they're like fourth place, right? So any of the tokens in front of Track right now is basically all listed on Binance. But the idea here is they've done relatively well. But then the smart part about this is that they're using BRC20 as the entry point for a lot of people to get involved with this concept of decentralized indexer. And then over time, when the product is out, which 2 weeks ago they announced the first version of the Track Core, people will be able to basically stake their BRC20 tokens, in this case Track, to kind of support the tap protocol, and which makes it more decentralized. And what's interesting about this mechanism is that whereas in Ethereum, you usually have one token that supports the consensus, the network, here it is a different form of token that's supporting the mainnet, and then you have this chain of consensus that works around it. And this is very smart because that means that, for example, you're staking Track, you're earning tap token, but you're not selling. You don't have to sell it. You can just keep it, and then you can keep staking it, and you get pipe. And pipe is the end result of this ecosystem where it is UTXO based, is what Casey had proposed, and is by far, in terms of the narrative, this is going to be the end goal. Where if everything is moving towards Casey's direction, then this would be another entryway. So basically, they have kind of planned this out in the early days, where they have the ability to go to UTXO, they have the ability to be in BRC20, and they have built the kind of like tap ecosystem themselves, kind of like in between. So I think that is a very creative way of building their mechanism. But the most important part about this project is that it is one project with 3 tokens, but then they treat each other as like a family, and which is like something that's like really, really unique. I mean, you look at BRC20 today, a lot of the BRC20 tokens are kind of like spread out, and they're kind of doing their own thing there, right? If you look at the tap ecosystem, you'll notice that everyone's kind of very super supportive. They treat each other as like one family. And then the pipe ecosystem is mostly primarily Asian based. The track ecosystem is mostly Western based, and then the tap ecosystem is, the tap token is not out yet, but then obviously the tap ecosystem is mostly investors and developers. So it's like this one project that have the benefit of both sides. And so like when we decide to invest in this project, we look at community, we look at division, we looked at, is this actually solving a real problem? But the other thing that worked really well with Karma, for example, is because Karma is the backbone of Karma is an NFT project, which is community based, right? It's IP based. And so you do need an infrastructure that kind of support a lot of these IP features. And one of the most important IP feature is the airdrop feature. And so if you've been following, Karma, then you'll know that Karma will be doing an airdrop to 53K addresses across the Ordinal space. If you did that using BRC20, it could cost you easily 200K USD. But because we're using TAP, it's going to cost us less than 10K USD. Wow. And so that's a significant difference in terms of cost. And you're able to do that because TAP provides these batches of airdrop that makes it very, very easy. But at the same time, it's one of those things that there's pros and cons, right? If you did that on BRC20, then maybe it's easier to get listed. But the way that I look at a lot of these things in the tech world is that there's no rush to get listed, right? If you're gonna get listed, if you're gonna be building a product, and then it takes time to build a product, it's actually fine to be listed later on, right? You can spend that time building a community, you can spend that time building more product, and then actually when you get listed, you actually get more alpha out of it. The way that we look at it from a very practical perspective is when projects approach us, our investment approach us, and it's like, hey, should we list on Binance first, or should we list on a tier 2 exchange or 3 exchanges first? My first impression is, if you're listing on like Binance exclusively, then of course you can use Binance, but generally you're not going to get listed on Binance immediately. So it's better off to just focus on the tier 3, tier 2 exchanges, and then you work your way up. And so when people come in, when communities come in, they know that there's that potential alpha to get listed on Binance, right? And that's kind of like one of your bullets that could actually pump up the price. And so it's like, from a strategy perspective, it actually makes a lot of sense. It's similar here, where we're just really focusing on building the community, really focusing on building the product. And then when the time is right, we're gonna get more alpha than as opposed to like launching today.
One final question, and then I'll pass it to Dogfather, is what was the reason why people would want to swap? Like, you guys gave them a window to swap for Karma tokens, like over the last few days. What was like the carrot that would cause people to want to do that swap?
Yeah, so there's a huge part of this, right? So initially we were looking to this swap, but then we realized something, which is like, a lot of the Tap Dev and Benny himself have been kind of like helping us with building this, and we want to be able to continuously have this relationship. And then so halfway in the partnership, we realized that, since you guys are looking for validators, and you guys are looking, and the way it works is you need to have track tokens. What better way is to basically make Karma one of the validators, and we have one of the top 3. I think we are the top 3 holder for track right now, 500K. And basically this is locked up, and to support TAP protocol. And so I think there's a huge incentive where it's like, even though yes, we've done the airdrop, we will be doing the airdrop, but then yes, we've done the swap now. We basically tie both communities together as one, and that to me is a huge plus, because by doing that, you're basically bringing 2 families into one, and there's both sides are being adding value. So these are things that that these are tiny things. I think if we didn't have that, then the relationship would not be as strong.
So I'll be able to basically stake my Karma token and earn rewards, earn pipe, basically
in the future. Yes. So the TAP protocol enables Karma tokens, because Karma is based on TAP, right? So and TAP enables staking, and so in the future, when TAP goes live, then you can start staking some TAP tokens, and Karma can follow on as well. So these are things that are very, very interesting that it will be very, very difficult to accomplish if you build it on BRC20.
Gotcha. Let's go to Dogfather. What's up, man?
Yeah, Jason, thanks for sharing some light, because I have to admit, to me, that looked very complicated when I looked through the specs. And I was like, oh, damn, where should I begin? I mean, here or there, or honestly, this is like for someone who has like not the whole day to jump into that, pretty complicated. So thanks for that. That was really helpful. So maybe let's dive a bit deeper into the pipe token, because I mean, we all talk about runes every day, right? I think this is one of the main topics in our space, till the halving, and after that, of course, with brute force even more. So can you explain a bit more? How would that work? I mean, we know that the official kind of like rune protocol is not out yet. So do you plan to migrate then, or do you have your own protocol? Like the pipe protocol has its own kind of protocol independently of what Casey is doing. So that would be interesting to know for the audience and for myself.
Yeah, to my knowledge right now, pipe and runes will be separate, but they're both based on under the same framework, right? So they're all both UTXO based, right? And so actually, Sora Ventures have already invested. I guess we can't announce it yet because it's not public, but we already basically invested in 2 companies that are targeting runes, the runes ecosystem, and both companies were leading the round. And so it's a question now is like, how do companies like, like the one that we invest, even get involved with the quote unquote rune ecosystem when rune is not even out yet? And this goes back to kind of the strategy that Benny did, right? And which is, you don't need to have the tech first. You just build the community first, and then you can have ways to incentivize people, like the same way that you've seen on Blast, right? You get the points, and then once the token's alive, then you can convert those points. There's a lot of ways that people can build communities together. And so the idea here is to get involved early, and then build that ecosystem. And then once it's out, then you can explore migrating and then see if there's other features you can build on top. And so Pipe, I think it's in the spot where it's just kind of like in between all that, where they have the option to do that, but then at the same time, as of right now, it's quite independent, because also there's a lot of projects that are being built on Pipe. And so it's interesting to see how it will grow for sure. But in terms of the low-hanging fruit, I still think that if you're speculating, then I think Track obviously is a better choice. If you are developing, I think Tap is definitely a better choice. And then if you are just like in general a big fan of UTXO, then it's really just Tap. Sorry, it's just Pipe.
Interesting. So, throughout the last like 10 minutes that you've been speaking, you kind of shine a light on something important about, capital allocators, that there's more to it than just providing capital, right? You basically pinned these 2 communities together and provided some expertise in tokenomics to, encourage these different types of incentive mechanisms. So what is it, and why do you think people, mostly in the crypto space, are so against VCs? It seems to have such a negative stigma, when realistically you're bringing these 2 communities together and providing additional stuff that's not just a kind of, like a quantitative analysis.
Yeah. No, that's a great question. I think VCs in general just have, investors in general just have, they're not the greatest, right? In the world of finance, in the sense that a lot of people just view investors as just people who are just to make money. But the Web3 industry is very misleading when people say they're all like venture capitalists. It's not. If you look at like just in general, the structure of the structure of investors in the Web3 space, I think 99% are all kind of considered to be VCs. But you look at in the Web2 world, there is VC, there's PE, there's M&A, there's IPO, and there's a lot of hedge funds involved, right? There's a lot more proper like vehicle and team that kind of like built around this ecosystem, right? But in Web3, it's just VC, right? And so there are majority of the VCs I think are not really built to be VCs, because in order to be VCs, you got to like do a lot of things that, like, for example, like you're really holding hands. You basically have to be a giver. There's a lot of things that you gotta like do in order to kind of grow the project from like 0 to 1, right? I think majority of the VC are more like they're more like hybrid, right? So they're a bit of a VC, they're a bit of a secondary and trading. Like that's what most of the VCs are like in the US, right? They have a trading arm as well. And so the way that we kind of like structure ourselves is that in the past, if you did like Ethereum projects, a lot of those projects a lot of the deal sourcing will be coming from peers. But in Ordinals, it's totally different. Like in Ordinals, it's coming from Twitter, right? So it's like so about like 2 months ago, when we did our conference Sora Summit, and we invited a bunch of individuals in the Ordinal space to come speak, including Casey and Domo. And I started to learn more about how they look at this world, right? And Casey's an amazing character in the sense that he's given me a lot of ideas in terms of why this ecosystem have grown to be so successful. Part of that is because he never had the incentive of wanting to raise a lot of money, or like money is not his priority in life. Like for him, it's more about giving back. And so I also asked myself, it's like, when we're running the Sora Ventures Fund 2, is it just really here for money, or do you really want to see yourself build an ecosystem? And obviously the answer is, want to be building the ecosystem. And so, the one thing I did after Sora Summit was I got myself into Twitter. And so every day I would just force myself to join these spaces and then meet more people, and then, share more views on terms of like what's happening in this space. It's been 2 months, and obviously the count has grown a lot. And I think a lot of people have started like noticing, there is this one VC called Sora Ventures who's super hands-on with their investments. But the idea here is, I think it's not because we want to be hands-on, it's because the space is just so early, right, compared to Ethereum. And so if there's ways that we can bring value to the table, we will 100% do that. But obviously, there are still projects out there that we invest where we're like, we feel that they're way more experienced than we are ourselves, and so we just let them do what they want, right? And so the majority of the projects in Ordinal are still extremely early. And one of the reasons that kind of the trend that we see is that you'll see a lot of projects that have a similar trend where it's like this one individual developer who started building stuff, and then halfway in, like it was just basically an experiment, and then somehow it just became something big, and then like more people started to join, and it's like you never really planned to even start a company, but then now you have a company, right? So it's like a big part of the Ordinal space was like that.
Well, that's the entire Ordinal space.
Exactly, right? And so like as VCs, we also have to start like adjusting to that narrative, which is like not every, because things are built like that, then US VC also need to be much more hands-on. It just can't be like a deal where you invest and then it's like, we'll let you guys do whatever you want, right? It's more of a deal where it's like, we understand that this is where you guys are coming from. We understand that everyone here is not as experienced. Let us see what we can do to kind of help you guys. So I think people need to understand that we're not doing this because we have to do it, but it's because the ecosystem here is so different compared to compared to Ethereum, compared to like everywhere else in Web3.
Do most of the deals you're doing, are most of them based on like your value as an equity partner, or are you basically doing some share of a token? Is that the way? I would assume most of it is like token based, but give us a little insight, not specifics, but give a little insight on.
Yeah. So we do some investments in equity, and those are usually in the media and data space. And then majority of our investments are in the form of equity plus token warrant. And most of the time we will execute on the token warrant side.
What is it? Can you explain what a token warrant is?
Yeah, so I think it's just for tax reasons. I think it's basically a lot of people in the US realize that they can't just buy tokens because they're all deemed securities. And so, like, you remember the early days when you first invest in ICO, you use Bitcoin to invest in ICO, and then you use ETH to invest in ICO, and then you use USDC to invest in ICOs. And then this SAF standard came out, right? But then ultimately that that got replaced by this equity plus token warrant because for tax purposes and SEC whatever, right? It's just a lot more secure to tell people that you're investing in an equity company, but have the option to kind of like convert into tokens if you wish to do so. So it's not like it's more of an option, right? And that is one way that I think VCs have kind of like developed this format in order to protect themselves from regulators who are calling them out that you guys are investing in and regulated securities.
Right. So my thought would be in a down market, in a bear market, you would want the equity, but if you're going into a trending bull market, you'd probably want to convert that to a token to capture a higher potential of an upside. Does that sound right?
Yeah, for most part, I think so. Yeah, but like our fund have had different strategies where like if the market is not doing well, then we just play relatively safe and just capture delta. And then when the market is relatively flat, then we start capturing the altcoins. And then when the market is doing relatively well, then we invest more aggressively in the primary market.
Interesting. And now, okay, we'll kind of expand outwards a little bit from the early ordinal space, but looking at Bitcoin now, we covered a little bit about L2s. You mentioned some of these other protocols, right? Like stamps and BRC 420 and some of this instances. Are you looking for any of these new protocols to pop up? Is that something that's attractive to Sora Ventures? Right, something like whatever BRC XYZ or Pipe or whatever comes next. Is that something you're looking for?
Yeah, we're always very excited about these layer one ecosystem deals. I think, look, I think layer two is a bit hyped up right now. I think when you're seeing like 30, 40 L2 deals on Bitcoin, all of a sudden it is kind of overwhelming. But if you actually do the due diligence on a tech, 7% of it is still copy and paste. Where everyone's just copying the same structure, and then maybe there's 30% that has certain differences. But the whole point of these L2s at the end of the day is still you're not able to solve the problem, which is it's too centralized. It's too centralized, and so you can only target really the audience, which is Asia. That's really the only place you can do it because you're not sensitive to these things from a user perspective. But if you're growing this market, I think you should be looking more from a global perspective. And as a global perspective, you look at things that worked really well in Web3. It's the one that has a decentralized element, right? And so again, going back to, I think every fund had their own mandate and every fund have kind of their own strategy. We're not here to judge because obviously, a win for L2 is also a win for us in the sense that more people will get involved with this ecosystem. But I do feel that because there's overwhelming of capital and resources put into L2, for us, we probably would like to put more on L1.
Did you learn anything like last cycle, with L2s on Ethereum? Were there any like key lessons you took away from that in the way you're looking at Bitcoin this kind of cycle? Any kind of learnings there?
Yeah, so I think from a VC perspective, like this is a very hot topic. These are some of the topics that would drive a lot of the larger VCs that they could, especially the ones that like ACCC, Pantera, they can put a larger check size, right? There's certain narrative. It's like the traditional world, right? There are certain industry that are meant to make more profit than others. If you're in the gambling business, in the casino business, you're naturally making more money than the media business, which is usually a losing business, right? And so the L2 business is the same. It's the same, right? The L2 business is usually it's kind of like a large narrative and where VCs would like to park their money at, and this is where things are hot. And so that's why it has captured a lot of the tension where a lot of these L2s are moving towards Bitcoin. But again, I think what I've learned from that is that in my experience of investing, there are so many ways to make money in our industry. Ultimately, you have to ask yourself: is this investment a proper fit for your fund? For example, if I'm investing, Sora Ventures is a 50 million fund for Fund 2. If we're putting in an average check size of 500K in a deal, but the valuation is, let's say 300 billion. 300 million. The likelihood of that flipping 3x, even if it flips 3x to 900 million, I'm only making 3x, right? But if I'm parking that money into a valuation that is like 20 million and it flips 10x, only hits 200 mil, that is already 10x for me, right? So it's all relative, right? Every business, every fund have their own mandate for a reason, because obviously we're bullish on L2, but is it our narrative for our fund size? Not really, because that's not going to make a lot. That's not going to make a lot of money for us, right? What we are sensitive is to things that have explosive alpha, right? And usually that's an L1, right? If you look at the history of anything, we're basically investing in the future. So Solana, the Solana Bitcoin, the AVAX on Bitcoin, the Near on Bitcoin. So all these guys that you see on Ethereum, that is going to be all coming in from the L1s, right? And L2 is just Bitcoin, right? So the idea here is, if we do one deal and makes 100x, that is all it takes to get the fund back into shape where investors are happy, and that's our business.
Interesting. So as a capital allocator, how do you prevent tribalism from taking over and pigeonholing you to just one ecosystem? For example, here, right, with ordinals and Bitcoin, the community is very tribalistic, right? Because they have a high preference for decentralization and self-sovereignty. Whereas if you move or if you want to start investing back over to Solana, right, or Ethereum, maybe those teams that you've invested in or those communities feel burned, or that you have maybe lost faith in Bitcoin ecosystem when you're just looking for the opportunity. How do you prevent that from happening?
That's a great question. I'm also looking for an answer. But I think one of the things that we've done, which is, one is being more open as a project, is being more open. I mean, look at Karma, for example. Like Karma initially was never really built to have these like airdrop across 7 communities. Because I guess the narrative is we weren't confident enough that we're launching this thing called Karma that people will want it, right? So only did we launch, and then the market started kind of like giving feedback to us and giving us comment, and those were all positive comments, and they were excited about what we're doing, and they want a piece of it. Only then did we feel like it was ready for us to share this proposal where, hey, let's airdrop the community, right? Otherwise, I think you're just a bit too arrogant, right? So I think one of the things that we've done here is, one is we try to be as relatively humble and open-minded while taking a lot of feedback from the community and in terms of what people want, and then 2, turning a lot of these feedback data research into ideas that would give benefit to everyone. So in this case, in the form of airdrop, right? So like that would get people excited, right? Where like they have a piece of something and they feel like they can use it to that's how most of the collectibles started in Runes anyway. So like these are things that I think a lot of people would agree that it could build communities together. But other than that, right, I think there is still, you're right, I think this is going to exist for a while. Where like different tribes and just in general different collectibles would want to be exclusive, right? We've seen that in the Ethereum space, and I'm not sure if you guys follow me, but I'm super close with Machi. I was the lead investor for Machi's first project in Web3, and so I've always built a relationship with him, and we meet like occasionally. But like even for someone as degen as Machi, like it's really hard for him to be like, yeah, let me do something in Bitcoin, right? Let me do something in inscriptions, because they're just like so just basically all kind of like in this bubble of Bored Ape bubbles, right? And the only thing that they can think of is Bored Ape, right? That community, and then they can never leave that bubble. And so like that could be a form of strength, but at the same time it could be a form of weakness, because if your community is not innovating, your community is not well, the industry is always innovating, but then you're always kind of like sitting behind just like doing your own thing, then you're not going to innovate and you're not going to improve.
Well, we should have done a Karma drop to ape holders, man. That should have been the key. We could have done a cross chain through Emblem Vault and that would have been fucking huge. We could have brought in all the.
Maybe we should. Maybe we should. Maybe we should just do that, and then we're just like you got to like teleburn over to get it, kind of thing.
No, dude, that's what we do. You put it in an Emblem Vault, and then the people can unlock it and bring it right back to Bitcoin, and boom, it's bringing all those ETH people back home to Bitcoin, man. That's what it's.
Oh, love it. Yeah, for sure.
Yeah, we've had someone reach out about that. So I'm just curious, like, what's your take on interoperability of something like Emblem Vault? Do you think that ecosystem, right? Bridges, wraps, vaults, these type of ways to move assets across chains. Is that something that's that you see as being like a large necessity in the industry that has a lot of room to grow? Are we too early, or is it something that's not needed, and crypto will end up just being more just, mature native ecosystems?
100% needed. 100% needed. I think the way to look at it is like bridges are scary because they're so useful, but then they're also like easily attacked, and you can lose everything, right? So it's one of those things that as a user you got to be very, very careful in terms of understanding what the security is, understanding the risk behind it, but more importantly, knowing like the basics to kind of protect your wallet and all that stuff, your asset. Unfortunately, most people don't follow these rules, and so like they get they get wrecked in the process. But no, I do think that Bitcoin 100%, you do need that bridge, right? We've seen that happening in Ethereum, and then Solana. I think there's a project called Zeus network, right? So it's like a lot of these companies in general that are building bridges. I think at the end of the day, they want a piece of the Bitcoin market, right? And what better way is to build that through a bridge? But how effective it is, in the sense that this has always been a thing, which is like bridges are tools, but it's not something that you can just like sit there forever, right? You're done using it, you're done using it. You don't need it, you don't need it, right? So it's like it's just one of those products that it's like it's not like DeFi where you can just look at the screen every day. Just the nature of the product, it's just because the nature of the product is just tooling. It has its disadvantages from a user perspective, but 100% it's needed. It's just like it's not as hot as an investment compared to like other sectors, because these are just like one, maybe like you might just end up using once a day or maybe like once a week.
That's a valid point. What's up, Chris?
Hey, yeah, Jason, you've really had a pretty unique perspective on the growth of the industry over the years. I remember Fembushy was one of the biggest funds to really kind of break through over to the West as well, throughout like the ICO craze and everything like that. You've had a pretty good seat. Bitcoin was so heavily skewed towards the East, trading wise early on, mining wise early on, and then kind of came to a screeching halt after the most recent ban. What was it kind of like investing at a professional level through all those ups and downs? And what's the general temperature on the East these days?
Yeah, it's a lot of politics. That's for sure. A bit too much, I think. So the Chinese community is interesting in the sense that they play one of the most important role in Web3, but at the same time, they don't. Their values are different than a lot of the users in the West. What I mean by that is a lot of the products and a lot of the activity is driven by mostly speculations and value creation, less of product and innovation and technology. And this is just the nature of just the market. They value certain things, they value less of certain things. And so this is why I've said, I mean, if when you're building a product, whether it's a VC fund investing in certain projects, or you're a project investing in certain markets, you got to be very clear in terms of like where your target audience is, like who is going to end up paying for these services, right? And so you've seen certain projects that have done really, really well because they were able to really capture that market and really understand their audience. And it's been like that actually since the first day I've joined the industry in 2015 all the way to then. And it's just a different. It's just gonna be a different crowd, but it's the same, right? It's if people are still in it because they expect that you can still make money, like and you hit that 10x. I'm not sure if you've been following my Twitter lately, but I accidentally launched a meme token called the Sora token on Tap, and I think it just surpassed like 2 million market cap, which is like 70x for some people. Like, did I plan to do that? Like, no, it was basically a demonstration of a Ordinal's like 2 portfolio companies that we invested working together, and that was basically it. But the community bought it, and a lot of the people started realizing that this could be a degen play, and so they played in, and a lot of Chinese community people got involved as well. So you notice like a good part of that community is still there, which is a lot of Chinese community are just looking to speculate and hopefully make money out of it. But the interesting part about the West is that they are still kind of not they're still kind of like more about the tech. They're more about the narrative. They're more about the art and Ordinals. They're still working on the art, which I think will take years, but this is what they like, right? So it's like, and they're not kind of like, I guess some people do feel like they're FOMO'd and they want to get involved with some of the projects in the East as well, but generally what we've seen is that it's a very clear split between the two markets, even though they're the same thing. They're both inscriptions. If you look back in kind of like the 2018, 2019, it's like I think there were a lot more deals where like the Western funds and Eastern fund can collaborate. But in the last 3-4 years, I think Western funds have grown so large, like their AUMs are on the billions, and the Asian funds are still kind of like in the 10 to 50 million. That their strategy have completely changed. And so it's like we used to work quite closely with Pantera Capital, for example, in the early days. Now we almost never touch anything for that Pantera Capital invest, not because we're not bullish on their portfolio companies, but it's like their AUM, their single check size is like 5 million, 10 million. The worst our check size is like 500K, right? It's like it's not on the same level. It's basically the different market and different products. And so like that is where I feel that there's a huge split in terms of the VC side as well. So yes, like things have definitely changed because of just how much more capital there is in the West.
Give me an idea, because I'm not well connected, and it's like I have almost no like understanding of that mindset. So I'm just assuming, because I just watching Ordinals play out and watching some of the other shitcoins kind of play out. It feels like, correct me if I'm wrong, but it feels like kind of the Chinese trader is looking to get in for a very, very low dollar amount in order to kind of flip out. So looking to get in for like, I don't know, $5, $10, something like that, to be able to flip out, at a 10x or something like that. How do you look? I mean, if I'm right in that kind of viewpoint, how is like, if you're bringing a product to them, if I'm launching a project or something, what's the mindset from a developer or creator or a project's perspective that they should take, like looking to kind of target that market?
Yeah, so if you're going for a Chinese market, you got to be launching a fungible token. Regardless of what your product does, you need to have a fungible token. If you're not targeting the Chinese market, you don't need that. You fundamentally don't need a token. And so like that's the biggest difference. I mean, for example, I'm giving these lectures at like a Bitcoin Startup Lab, and they do like all these lectures every day. I think I go to I've been there like 3 times, but basically every time it's all about, I think people, the most interesting questions are like, like what do the Chinese audience like, or like what is something that I can do to get the Chinese audience more excited? And the answer to that is launch a fungible token, or launch something that enables people to speculate. And the more liquid, the better, right? So for example, when Karma launched, we're like, hey, we gotta be able to kind of differentiate ourselves from Runestone. They're both airdrops and they both have historical significance, but one is the runestones will be mostly on Magic Eden, whereas Karma might potentially be on Binance. Right. So 2 different markets.
Very different. Yeah.
Yeah, completely makes sense. If anyone has a question, you could request to come up here, or we could begin to wrap this up. It's been a very interesting conversation. What's just one question I have out of curiosity? Do you think, with all of these fungible token standards that are popping up on Bitcoin, whether it's runes or pipe or tap or BRC20, is there going to be one that captures the majority of the market, or do you think that there will be many fungible standards that exist because they're all satisfying a different necessity, or they're trying to solve for a different problem based off the community that they exist in?
Yeah, I think it will all kind of come together as a couple layer ones protocols, and the reason for that is because there's only so many developers out there in the world, and developers are, they're smart. Like if I'm developing something, of course I want to be developing on something that's mature, right? That has a lot of infrastructure, and so it's like over time, then it becomes very obvious. It's really just going to be a couple of ecosystems that have the most developers and the most infrastructure that supports it. Like, what I mean by infrastructure is not necessarily exchanges supporting it. Probably more like, if you have like certain features that enables like airdrop, staking, all that stuff.
Got it. Makes sense. Yeah, it'll be interesting once runes pops up, and to see how many tokens over the next few months or communities end up migrating there, or even teams that start a token on runes and then end up leaving because they need something else.
How do you look? Sorry, Jake. How do you look at like with that idea of developers? Like with ordinals, it's kind of like the users came first, brought in this wave of interest, and then the developers came in. Have you seen it, I guess, in a different way? Like usually you get developers first, and then you get something pop, and then you get users.
Yeah, that's a very good that's a very good question. I'll share something that's very interesting. If you go to genie.data, geniedata.com, right? I'm sure you guys know that's where you guys like check all the data, on-chain data. You'll know exactly what I mean by it. It's same. They're all inscriptions, but then they serve different markets. BRC20 serves the Chinese market, and so that's, if you look at the Genie data all the time on BRC20, they're actually quite minuscule relative to the top ecosystem, which is mostly developers. You check on on-chain data on Genie, you'll realize every day is mostly tap related stuff. Whether it's domain is tap, whether it is the protocol is tap. But then you look at BRC20, it's always that small like that square there. It's because people for BRC20, it's mostly speculation, right? It's just speculation off chain, so everything's on the exchanges, right? People are not, again, if you're targeting the Asian market, it's less about the developers. It's more about the speculation, right? It's more about the liquidity, right? And so like immediately, there's 2 protocols like BRC20 and 2 standards, BRC20 and TAP. But just looking at the on-chain data, you can tell that which one is more Chinese, which one has more Chinese user base, and which one has more Western user base.
Interesting. So we do have one person on stage who came up. Dogify has a question.
Hey, what's up, everybody? Thanks, Jake, for letting me up here. Jason, it's good to hear your voice again. Really do appreciate your, the inputs at the lab. Like, we're one of those projects going through the incubator right now, and it's super helpful. So yeah, thank you. One of the questions that I had, however, was around this analysis and this narrative around like retail kind of investors wanting to have, especially in the Asian markets, right, wanting to have like cheap and fast transactions. And it's really interesting, right? Because like Bitcoin is pumping and BRC20 is like for wild speculation, but like the fees are just not tenable, especially when a bull run is really going, right? So having something like a pressure release valve like track makes sense. But like, my curiosity is that do you feel like that would extend to like, and I'm selfishly asking here, to be honest, like I have no problem asking, but like, do you think that like this pressure release valve will like flow over to DRC20s, for example, right? Because you need hot liquidity, you need cheap transaction fees.
Yeah, so no, great question. So I think the reason why I feel very bullish about Bitcoin is, when you're investing in Bitcoin, you're not really just investing in the Bitcoin blockchain. You're effectively investing in all the other forks of Bitcoins too, So whatever that happens in Bitcoin, you can in theory move those narrative to other chains as well, right? So one being the DRC20 ecosystem, which I personally am very excited about as well. Especially with just meme coins in general. If you have a true meme coin in the future, I think it's all going to be on DRC20 or just in the Dogecoin ecosystem. But again, I think this space is incredibly early, right? I think the way I look at it is like there's just not enough time, right? There's just not enough time to build. But then I think that the narrative is that people will have some, especially the audience who are so used to they care more about speed, they care more about the UX, they don't care so much about the decentralized part. They just want to get things done. Then the L2 narrative is really hot, right? This makes a lot of sense. But then again, the L2 narrative is really targeting a lot of the users in Asia. And then of course you have the layer 1 infrastructure, which a lot of times you're really attracting more developers to build on top of what you're building, right? And that gets you excited because if those work out, then you can also build layer 2s on top of that. But then the infrastructure will be basically a lot more robust. And then, of course, if you're able to build all that, then you can kind of migrate that narrative into the other UTXOs chains out there. So this is why I feel very bullish about it, because it's not just Bitcoin. You have Dogecoin, Litecoin. People are talking about LRC20s. It's endless in the sense that I don't know how long this is going to last, but I feel like it's going to be a good 4 or 5 years of just investing into Bitcoin.
Awesome. Thanks for the response. Chris has a question. What's up?
Yeah, and just to go back on something that's super interesting with kind of DeSci and what you think about the growth of that kind of sector over there. Obviously, you've been evaluating crypto startups for a while, and they're always kind of like notorious for having a bunch of opaqueness and tech jargon and kind of overcomplicating, what they're really trying to solve. And science is much of the same, of just a kind of a lot of empty promises with a lot of murkiness around them. And then kind of the fusion of both of them seems like it might be a bit pretty complicated between both industries, kind of sifting through, who's solving real problems and has, a real future of building an actual innovative company. What do you think about kind of sifting through those, and how difficult that would be to kind of find real teams building real businesses around it? And why did you kind of decide to go that route rather than kind of one of the other biggest topics, which is kind of like the sector of crypto and AI?
Yeah. So I think the logical explanation here is because we were pretty big investors in the entertainment, gaming, NFT space. And we feel like if you were really looking to invest in the true alpha back then, you should be investing in 2017, 2018, and then exiting 2 years ago, which we did. And so once you exit, then you don't really get involved in that narrative again. You look for a new narrative that has extremely high alpha. And so science is interesting because so the science base is actually quite in terms of capital, like it's just in general, like capital does not flow very well in science, in the world of science. And when Web3 comes in, a lot of people are like, okay, wait, what are the use cases you can do, right? Majority of use case will still be science focused. It's not like just because Web3 comes in, it turns something into like A to B, right? It's still A. But the biggest value add for Web3 here is, I think, it's capital efficiency, where a big part of how drug development, for example, goes through is all these processes, but it's also a big part of how capitals are being allocated among research. And so if you look at just in general, what's happening with just in general, like nonprofits allocating capital, it's this group of talented researcher like going for a couple of thousand USD, which it's obviously very competitive, but at the same time, it's just you don't get a lot of money out of it. And so the whole idea of DeSci here is, at least for what I see right now, is that because Web3 is basically you're pumping liquidity And you're able to do that quite efficiently because you're on Web3, and that's what the beauty of Web3 is, right? You can have a lot of these value being put into the science space, the research space. By doing that, you're able to kind of generate a lot of these 0 to 1 scenarios within the research space. Once they generate some of these 0 to 1 scenarios, they can effectively start utilizing certain parts of Web3, for example, in the form of NFTs, in the form of DAOs, to achieve greater milestones. So that's what we're seeing so far. But ultimately, the idea here is you can tokenize some of the asset you have. You can tokenize some of the workflow you have, some of the supply chain you have. A good example of that is, in the early days when I was investing for Fimbushi Capital in the U.S. market, we actually did invest in a lot of companies that did like IoT, healthcare, and they were using about 10 to 15% of blockchain tech. But because there was no token involved and everything was mostly Bitcoin or Ethereum, there was very, very limited amount of functionality there, whether functionality for users or functionality from a B2B perspective. What's cool about tokens is that if you want, it's a replacement of money, right? Most products in this world in Web3, it's kind of fake until you make it. And so science, a big part of science development is also fake until you make it because there's a lot of trial and error. And so if you launch a token, you can elevate and increase that path a lot faster. And so the idea here is by injecting Web3 research into research, you're effectively fast forwarding the entire phase of research development in just humankind by 3, 4, 5x exponential. That things that we haven't seen before, and that to me is very interesting and impactful.
Wow, that was a very thoughtful answer. Really appreciate it. It looks like we don't have any more questions. So Jason, dude, I really appreciate you for coming on and sharing this incredible insight with us. I learned a lot, and I'm excited to follow you for your adventures. Are there any final comments or anything that you'd like to say before we wrap this down? What's the best way for people to follow you, or maybe if they want to get involved and talk with you about Sora Ventures, what's the best way to
Twitter.
All right.
Twitter all the way down, baby.
All right, guys, for those that don't know, Adam, myself, and Chris, we work at Emblem Vault, the leading NFT interoperability protocol in the industry. We host this show Tuesday through Thursday at 11:30 a.m. Eastern time. I believe tomorrow we'll be back talking about the inscription markets. There's been a lot of stuff that has been going on. And I think Thursday we'll probably end up doing a doginal space, as a bunch of people have asked again, as they're always quite successful every time that we do that. So make sure that you follow everyone on stage. Also make sure that you follow Jason, man, incredible insight. And as you can see, he's putting more than just his capital at stake. He's putting his mind in there as well and putting all these communities together. So really appreciate everyone who is here. And we'll be back tomorrow at 11:30 a.m. Eastern time. Until then, be safe.